The cars that quietly cost the least to insure in 2026. Not the flashy ones. Not the ones with the biggest rebates. The ones that month after month barely move the needle on your premium and most drivers never notice which category they're in. Here's the number that matters. Your insurance bill has almost nothing to do with the sticker price of your car. It's about what that car costs to repair, how often cars like it get into claims, and how much it costs to replace. Two cars can sticker within a few $1,000s of each other and land in completely different insurance brackets. So which body styles tend to sit at the bottom, the cheap-to-insure end? Start with small and mid-size SUVs. This surprises people. You think a bigger vehicle costs more to cover, but crossovers built on ordinary family platforms tend to carry some of the lower premiums out there. Why? A few reasons stack up. They're usually driven by lower-risk drivers, parents, commuters, people not looking to race anybody. Their parts are common and cheap, and they tend to do well in crash tests, which means fewer expensive injury claims. Next tier, minivans. Nobody dreams about a minivan, but insurers love them. Same logic, safe, practical, driven carefully, cheap to fix. If you've ever wondered why the least exciting vehicle in the parking lot is often the cheapest to insure, now you know. Then you've got your basic, older sedans and compact cars, the reliable, unglamorous kind. Common parts, modest values, and a long track record. Insurers have decades of claims data on these, and predictable is cheap. One category worth a caution: newer electric and hybrid models. They're clean, they're quiet, and a lot of them are genuinely safe. But the batteries and sensors packed into them can be expensive to repair after even a minor hit, and that shows up in the premium. It's not a rule against them, just a reminder that new tech and low insurance costs don't always travel together. But here's the part nobody checks. It's not just the body style. It's the specific trim. Take one popular SUV. The base model with a standard engine might sit comfortably in the low premium zone. Add the turbocharged performance version, the bigger wheels, the extra tech, and the same nameplate can jump a whole bracket. Bigger engine, pricier repairs, and a driver profile insurers treat differently. The pattern underneath all of this is simple. Insurers price what tends to cost them money. Powerful engines, expensive replacement parts, high theft rates, and weak crash results all push a premium up. Modest, common, safe, and easy to repair pushes it down. So what can you actually control here? More than you'd think. First, and this is the big one, the car itself is a choice you make before you ever buy it. If you're shopping and insurance cost matters to you, get a quote on the exact trim before you sign. Not the model in general, the specific version with its specific engine. Second, watch the features that quietly raise your risk profile. That high horsepower engine is fun for a week and shows up on your bill every month for years. A sunroof, big infotainment screens, adaptive headlights, all lovely, all more expensive to replace when something breaks. Third, think about theft. Some models get targeted far more than others, and insurers know exactly which ones. A car that's a magnet for break-ins carries that risk in its premium whether you park in a garage or not. Before you fall in love with a vehicle, it's worth knowing if it's on the frequently stolen lists. And fourth, remember that the coverage you pick moves the number two. A higher deductible, the amount you cover yourself before insurance kicks in, usually lowers your monthly cost, as long as you've got that cash set aside for a rainy day. Dropping collision coverage on an old, low-value car can make sense once the car is worth less than a few years of premiums. These aren't right for everyone, but they're levers you actually hold. And here's the one people skip entirely. If you already own your car, you're not stuck with today's rate just because you're stuck with the car. Rates for the exact same vehicle can vary a lot between insurers because every company weighs these factors a little differently. One insurer might treat your model as routine. Another might have paid out a lot of claims on it and price it higher. You don't control their math, but you do control who you ask. Your results depend on your driver history, your exact vehicle, and your state. Nobody can promise you a number sight unseen. But if your current car sits high on the cost to insure list, that's exactly the situation where checking a few carriers tends to be worth the 15 minutes. Want to see where your rate stands? The link below shows you how to compare.